What's up, everybody? This is Mike Hajar with the MPH team at Bank of England Mortgage. I'm here with one of my favorite realtors.
Melissa Reyes, and I'm from Remax Eclipse.
So today we're going to talk about, we did a little short snippet last week about land contracts versus mortgages, and I think it was because of an influx of land contract deals that her and I both got. But we're going to talk about some of the pros and cons from the mortgage side and from the real estate side. And we're not saying that there's never a time to do a land contract. There is just, there's much more reason to wait sometimes if you can. So with land contracts, a lot of the times people will jump into that is because they don't have the credit. And people are under the misconception that, okay, it's going to take me, 2 years to fix my credit or whatever it may be, or they just don't know that they qualify. And our metric, which I mentioned in the last video, was 1 out of every 5 clients does not know that they qualify for a mortgage. So one of the biggest downsides with a land contract that we've seen is if you can continue to make your payments on time, and for any reason, if the seller defaults on taxes or defaults on an existing mortgage that they have on the property, well, now you have to be vacated from the premises because the seller has foreclosed. Another thing is, for example, if you go late on your mortgage, well, you'll get a late fee after 15 days. It would report to your credit after 30, where with a land contract, you can be put out depending on the terms because there's a lot of tricky terms where the mortgage documents actually protect you. Another thing is huge down payments. I've seen, $150,000 down payments on a $180,000 home. So those are some of the things from the mortgage side, and then I'll let Melissa talk about some of the things on the real estate side as well.
Okay, so one thing that I've noticed as a realtor is I get a lot of clients who contact me and they want to do a land contract because they don't think, exactly like what Mike said, is they don't think they qualify for the mortgage. So I go on the MLS and there's such a limited amount of homes that match the criteria that they're looking for. And then when we do find them, there's other people that are also interested, but the sellers are also offering, to buy it outright. So therefore, if somebody has a mortgage pre-approval already and they can buy it outright, obviously a seller would probably prefer that over doing the land contract. Also, a lot of these contracts that I've seen, it's a win-win for the seller, and they have very strict stipulations. I've seen in cases where they want like a very hefty monthly payment, but also have the buyer pay taxes and insurance, sometimes the HOA on top of it.
Outside of the payment?
Outside of the payment.
Okay.
It's not always, but sometimes I've seen that. If the contract's not too specific and it's lagging in other areas, like with details of maintenance, I've seen where there could be conflict on who maintains the repairs of the home. And a lot of buyers, if they're doing a land contract, they think that it's theirs and, they want to make changes to the house. Yet if they default on the property, the seller can take it back, and then they're out the money that they put into the house on top of the money they gave to the seller and the monthly payments they've been making. Also, too, that I've also noticed is there's higher interest rates. A lot of sellers want 6 to 8% sometimes. I mean, sometimes they're lower, but they don't want to be the banks, so they want their money too. And the interest rate just guarantees that the seller or the purchaser is going to certainly be making those payments and try to pay the house off quicker.
And these are things that we've discussed with certain buyers. Like we have a buyer right now that I think they're not ready to move until November, and they were insistent upon a land contract. And once Melissa and I kind of explained the pros and cons, and I think the buyer was maybe at a 560 or 540 credit score. But within 3 months, they can be in credit repair, be mortgage ready. They're going to have a lower insurance rate. Their car insurance is going to drop. Their interest rate is going to drop. So there's so many pros to waiting. And yes, there are pressing situations where you might have to get out of your house immediately and, go and get into a land contract. Now, if you run into a land contract and say, okay, I think we said the average time was 2 to 4 years. That was the stat Melissa pulled up. Well, now you're getting hit with a balloon payment. If you do not have that full amount to pay after that 2 to 4 years, now you're forfeiting your down payment and all of the so-called principal that you've been paying this whole time. So and then also from the protection, because of the compliance that comes with mortgages and all the legalities, the buyer is 100% protected, where with a land contract, unless there's a real estate attorney reviewing it and you're paying thousands of dollars for that to happen, there's a chance the seller can, kind of trick something in there, some sort of verbiage that the buyer might not understand that puts the buyer at risk. So we're not saying that land contracts should never be used. We're just saying that please be educated by your lender. Please be educated by your real estate agent on what the pros and cons of land contracts are versus actually obtaining a mortgage. All right.
Exhaust all your options before you do a land contract.
All right, guys. Again, I'm Mike Hajar with the MPH team at Bank of England. And
Melissa Reyes with Remax Eclipse in Troy.
all right, get used to seeing a lot of us.